introducing corporate tax and what are all the general anti-abuse rules. Let us discuss about exempt persons or who are not subject to or who are exempted from corporate tax here in UAE. The first person who is exempt is government entities. The reason is the government is the one who is introducing corporate tax here in UAE, so they don't want to tax themselves. So all the government entities, including federal and emirate level governments and their departments and other authorities, will be exempt. And then the second category will be government controlled entities. Those entities in which government is having certain ownership interest or voting rights will be exempt. But so far, what will be the percentage of holding required to qualify as a government controlled entity is not mentioned in the corporate law. It will be announced in the cabinet decision. And then the third category will be businesses engaged in the extraction of UAE natural resources like oil and gas and other natural resources. And the fourth category will be businesses engaged in related non-extractive activities. There will be providing some doing some activities which are related to extraction of natural resources, but not extraction per se. And the point here to note is that the subcontractors who are assisting these non-extractive businesses will not fall under this category. And then the fifth category will be qualifying public benefit entities that are listed in a cabinet decision, which will be issued later. And then the next category will be qualifying investment funds that meet certain prescribed conditions. And then public or private pension or social security funds that meet certain conditions will be exempt. And then UAE judicial persons that are wholly owned and controlled by certain exempt entities like government entities or government controlled entities or qualifying investment funds or public or private pension or social security funds. If they are wholly owning some other judicial person, those will be also exempt person. And the last and the residual category will be any other person as may be determined by the cabinet decision at the suggestion of the minister. Here what you have to note is that the first 4 businesses will be exempted automatically, and the rest has to make an application to the Federal Tax Authority for exemption, and the exemption will be granted on a case-to-case basis. Depends on the merits of the application. All other first four cases, it will be automatic exemption by virtue of law itself. Now let's discuss who are all taxable persons. Taxable person shall be either a resident or a non-resident person. So all the resident persons will be a taxable person, and then the non-resident person will also be a taxable person for UAE corporate tax purpose, but subject to certain conditions and requirements. Resident person includes a judicial person. Here you have to note that the law says judicial person, not judicial person. A judicial person that is incorporated or otherwise established or recognized under the applicable legislation of the state, including a free zone person. So if you are having a company or an LLC or a civil company registered with the UAE mainland or other free zones, it will be a judicial person, and by virtue of law, your company will be subject to corporate tax and it will be a resident person. Second category will be a judicial person that is incorporated or otherwise established or recognized under the applicable legislation of a foreign jurisdiction. Let's say there is a company registered in UK or US. They can also be a resident person if they are effectively managed and controlled from UAE. Let's say you are having a company in UK, but the whole management has been done from UAE. Then that company will be also considered as a judicial person and who is subject to corporate tax. And the third category is a natural person who conducts a business or business activity in the state. So if you are a natural person and if you are conducting a business here in UAE, you will be considered as a taxable resident person. The law defines business as any activity conducted regularly on an ongoing and independent basis by any person and in any location, such as industrial, commercial, agriculture, vocational, professional, service or extraction activities, or any other activity related to the use of tangible or intangible properties. And the law defines business activity as any transaction or activity or series of transactions or series of activities conducted by a person in the course of its business. So if a natural person is doing a business or business activity here in UAE, he will be subject to corporate tax. So for a natural person or an employee who is on salary or who is on employment, the corporate tax won't be applicable for him. And the fourth category is the residual one. Any other person as may be determined by the decision issued by the cabinet. So once the cabinet decision is released, we'll know whether there are any other persons to be followed under this category. And in one of the recent sessions by Ministry of Finance, they are informed that the cabinet decision has already been issued but not made available for public. So in the coming days, we'll be having the cabinet decisions. And the taxability of resident person, all the UAE resident judicial persons will be subject to corporate tax on their income source from both UAE and abroad. So if you have a company here in UAE who earns income in UAE, it will be tax subject to corporate tax, and the same company earns income from outside UAE, still it will be taxable. And there are certain income earned through foreign subsidiaries and income of foreign branches that is subject to tax in other countries will generally be exempt, but subject to certain conditions and other requirements. And if an income earned from abroad is not exempt, then if you are paid any tax in any other foreign jurisdiction, you can take credit of the tax paid in the foreign country and deduct it from the corporate tax payable here in UAE, subject to other conditions. Whichever is less, you can deduct it, and there is no carry forward as well. And now we will move on to a non-resident person. Overall will be considered as a non-resident person. By definition, non-resident person is a person who is not considered as a resident person, and that either has a permanent establishment in the state or derives state-sourced income from UAE or has an excess in the state as specified by a decision issued by the cabinet. So we'll be having a detailed discussion on permanent establishment, and then we'll discuss on the state source income as well. And the taxability for a non-resident person is that a non-resident person will only be subject to UAE corporate tax on income from their permanent establishment in the UAE or income sourced in the UAE, subject to withholding tax. As of now, the withholding tax is 0% here in UAE. And now let's discuss about corporate tax rates. For individuals and judicial persons, 0% for the taxable income up to and including AED 375,000. However, this 375,000 is not mentioned in the corporate tax law. This has to be confirmed by a cabinet decision, which will be issued in the coming days. And any income excess of 375,000 will be subject to a corporate tax at the rate of 9%. That's for individuals and judicial persons. Let's discuss about free zone companies or qualifying free zone persons as the law says. 0% on the qualifying income and 9% on the taxable income. That does not meet the qualifying income definition. Here, the law says 0% on the qualifying income, but the law hasn't given a clear or specific or exhaustive list as to what are all income will be considered as qualifying income. The law says the qualifying income will be the income those mentioned in Article 3, and Article 3 says 0% tax will be charged on a qualifying income. So it's like a looping definition. So we have to wait for the cabinet decision to get more details as to which are all the items will be considered as qualifying income. And then there will be some relief for the small businesses apart from the 375,000, which is a minimum threshold. So there will be a cabinet decision will be giving more relief to a small businesses having a certain threshold of revenue. So that also we have to wait till the cabinet decision. And the tax period by default, it will be Jan to December every year. That's Gregorian calendar year. But if you are following a different financial year, you can continue to do that. Or if you want, you can change to Jan to December every year from now on. And now we know what are the taxable persons, or what is meant by resident person or non-resident person. Now let's discuss about branches. So branches, whether the branches is having separate judicial capacity or not. No, UAE branches of a domestic or a foreign judicial person are will be treated as an extension of their parent or head office. So branches will not be considered as separate judicial person. So there won't be any separate registration for branches. It will be one registration for all the branches together with their head office. Income of a UAE branches of a UAE business. Income will be taxed and it will be included in the corporate tax return of the parent or head office. So will a UAE branch constitute a taxable permanent establishment for foreign business? So if a foreign company is having a permanent establishment here in UAE, will that subject to corporate tax? Yes, generally it will be subject to corporate tax unless the branch do not give rise to a permanent establishment in UAE for corporate tax purpose. So, and if you paid any tax in any other foreign jurisdiction, it can be reduced from the corporate tax payable here in UAE as well. Now let's analyze what is permanent establishment. We will not be discussing in detail regarding permanent establishment because this is the largest article in the corporate tax law. So we'll be having a separate session on permanent establishment and state source income in the coming days. So I'll discuss the basic definition. A place of business or other form of presence in the state of a non-resident person will be treated as a permanent establishment. In the following cases, a non-resident person will be treated as having a permanent establishment here in UAE, where it has a fixed or permanent place in the state through which the business of the non-resident person or any part thereof is conducted, or where a person has and habitually exercises an authority to conduct business or business activity in the state on behalf of the non-resident person, or where it has any other form of nexus in the state as specified in a decision issued by the cabinet. So the fixed and permanent place includes a place of management where management and commercial decisions that are necessary for the conduct of the business has been carried out, or it can be a branch, or it can be an office, or it can be a factory, or it can be a workshop, land or buildings or other real estate property, or an installation or structure for the exploration of renewable or non-renewable natural resources, or a mine or an oil or gas well or quarry or any other place of extraction of natural resources, including vessels and structures used for the extraction of such resources, or a building site or a construction site or a place of assembly or installation, provided that site or place has been used for at least 6 months in a tax year. So these places will be treated as fixed or permanent place. So if you are having any such premises here in UAE, then you will be having a permanent establishment here in UAE and will be subject to UAE corporate tax. Then let's discuss about what is taxable income. So the corporate tax of 9% will be on your taxable income. Taxable income means the accounting net profit or loss of the business after making certain adjustments as defined in the corporate tax law, which we will discuss in the coming slides. Whether you need to prepare financial statements or not. Yes, you need to prepare financial statements in accordance with applicable accounting standards here in UAE. Whether you have to follow IFRS or mandatory, it is not specifically mentioned that you need to follow IFRS. You can follow other standards as well, but you have to note that international financial reporting standards or IFRS are most frequently used accounting standards here in UAE. And the method of accounting, which method you have to follow, whether you can follow cash basis or you have to follow accrual basis. You need to follow accrual basis. Cash basis is permitted in certain categories which will be decided by FTA or through a cabinet decision. So at the moment, accrual basis is only permitted method of accounting to be followed by all the taxable persons here in UAE. Now let's discuss what are all the adjustments which you have to make to your accounting profit or loss. First will be your unrealized gains or losses. That also we will have a detailed discussion. And then exempt income such as dividends. If you are having any exempt income, you can deduct those exempt incomes. And then intra-group transfers. It will be subject to transfer pricing and arm's length principles. And deductions which are not allowed for tax purpose. The law has specified certain expenses or certain items which cannot be deducted from the taxable income. So those deductions you cannot deduct from the accounting profit to arrive at the taxable income. And then adjustments for transactions with the related parties and connected person. If you haven't followed transfer pricing rules or arm's length principles, there will be certain plus or minus adjustments to your accounting profits which you have to do in your corporate tax return. And then any incentives or tax reliefs like the tax relief on foreign tax paid in any foreign jurisdiction, that also you need to deduct. And the last residual category will be any other adjustment as specified in the cabinet decision. And now let's discuss what is unrealized gains or losses, or what is the options available in the law. There are two options available to the businesses. First one is you can recognize gains or loss on realization basis. Like we are not only talking about foreign exchange gain or losses. We are talking about all unrealized gains or losses on your financial or non-financial assets, including impairment losses, provisions, etc. So option one, you have an option. You can elect to recognize gains or losses on realization basis. That is, as and when you realize that gain or loss, you can either add with your accounting profit or deduct as a impairment loss from your accounting profit to arrive at the taxable income or loss. Option two is for all assets and liabilities held on revenue account, you continue to recognize as and when those are incurred, as and when those are accrued, not on realized basis. For assets and liabilities held on capital account, you have an option. You can recognize on realization basis. So what are all the assets and liabilities held on capital account? Those assets which you are not intended to trade, or which like property and equipments or intangible assets or investment properties, those will be assets held on capital account. And then the liabilities held on capital account will be the liabilities which will not be a deduction as per the provisions of the law, and it will be settled later. So the non-financial liabilities as per accounting standards will fall into that category. So you can choose an option how you want to recognize the unrealized gains or losses while preparing the corporate tax return. And now capital gains. There is no distinction in the law between capital gains or other gains from your business. So as of now, both will be subject to corporate tax. Like a company who is selling their assets, it will be a capital gain for the company, but there are no restrictions in the law, so it will be taxed in par with the other business income you are generating. And capital gains on the sale of shares is exempt from corporate income tax subject to certain conditions. That condition also we have to wait for the cabinet decision to see in which are all the circumstances the capital gain on sale of certain shares will be exempt, etc. And now we know what is taxable income, or at least we have a discussion what is taxable income or how we have to compute. Now understand what is exempt income. There are 5 categories or 5 income which are exempt from the tax purview. First one will be dividends and other profit distributions received from UAE based or UAE judicial persons. The simple reason the UAE judicial person or the university company is already subject to corporate tax, so they don't want you to pay double tax for the profit earned by a UAE company. So if you are having an investment in another UAE company and you received any dividend, that will be exempt from corporate tax. And then dividends and other profit distribution received from a participating interest in a foreign judicial person. Let's say you are having a subsidiary back in India or UK or US and you received a dividend. It will be exempt subject to certain condition which is called participating interest regime. You need to have 5%, minimum 5% holding for the last 12 months, or you need to hold it for 12 months. And you need to have a right of 5% right on the divisible profit and assets, etc. So there are certain conditions you need to comply with. Then the dividend received from a foreign subsidiary will be exempt. And then the third category will be certain other incomes like capital gains or foreign exchange gains or losses and impairment losses from a participating interest. It means if you hold 5% interest in a foreign judicial person, etc., there can be certain other exempt incomes. For that also we need to wait for the cabinet decision. And the fourth category will be income from a foreign branch or a permanent establishment where an election is made to claim foreign permanent establishment exemption. That also, as I said, we will be having a detailed discussion when we are having the seminar for permanent establishment, etc. And the last category will be income earned by non-residents from the operation or leasing of aircrafts or ships in international transportation where certain conditions are met. So for airlines or shipping companies, there are some exemptions if they are non-resident companies like other airlines operating here in UAE, their income will be exempt subject to some reciprocal conditions. Like for example, Emirates Airlines operating in Saudi should get same treatment. Then Saudi Airlines, which is operating from Saudi, will be exempt from corporate income tax here in UAE. So it's called reciprocal exemption. You need to have same exemption for the companies, UAE companies back in other countries also. Now let's discuss what are all the deductible expenses. We know from the taxable income will start from the accounting profit or loss as per our financial statements. So the law says in principle all legitimate business expenses incurred to derive taxable income will be deductible. In certain cases, the timing of deduction will vary, like capital assets or fixed assets. You cannot deduct as and when it is purchased. Those will be subject to depreciation and amortization deductions over the useful life of the assets. So other than the capital expenditure, all other legitimate business expenses can be deducted from your revenue to arrive at the taxable profit. And expenditure incurred in deriving exempt income cannot be deducted because you are not paying any income, any corporate tax on the income part. So those expenses you cannot deduct. And if there are some expenditure that has a dual purpose, like you have incurred expenses both for the personal and business purpose, then you need to apportion based on the taxable person's business. So you need to analyze for each expenses whether it's solely for the business purpose or if it is for personal purpose or for your related parties expense, etc., you need to apportion those expenses. You can claim whatever incurred for the business of the taxable person, nothing else. So that's about all the general expenses or all expenses. And now the law has prescribed some expenses which you cannot deduct it. Even if it is for the business purpose, you cannot deduct it. These are specific or associative lists provided by the law. If you incur any of these expenses, then there is no question of whether to check whether this is for business purpose or not. So if you incur any expense straight away, these are not deductible, you cannot deduct it. So you have to add back these expenses to your accounting profit or loss. The first one is donations, grants, or gifts made to an entity that is not a qualifying public benefit entity. So government will be listing certain public benefit entities as qualifying public benefit entities. And if you pay any donation to them, that's fine. It will be a deductible expense. But if you pay a donation, grants, or gifts to any other person, it will not be a deductible expense. Fines and penalties other than amounts awarded as compensation for damages or breaches of contracts, like fines or penalties paid to levied by federal tax authority for VAT non-compliances or traffic fines also. You cannot call them as or treat them as incurred for business purpose. So you cannot deduct that. You need to add back those expenses to your accounting profit. And then the third category will be bribes and other illicit payments for obvious reasons, because those are illicit payments, you cannot deduct it. And dividends or profit distributions or benefit of a similar nature paid to an owner of a taxable person. Let's say you paid a dividend to your shareholder or owner. You cannot deduct that from your as expenses. Any amounts withdrawn from the business by a natural person who conducts a business or a partner in an unincorporated partnership. Let's say you are a natural person and you are conducting a business here, and you made some withdrawals from the company. Those cannot be treated as expense while computing taxable income. Those needs to be added back to your accounting profit. And then the corporate tax itself. So that also you cannot deduct. And the next one will be input tax, input VAT incurred by a taxable person that is recoverable as per VAT law. The law says that is recoverable, and it doesn't say that is not claimed. So we have to wait for further for the cabinet decision as to what actually the government wants. So let's say you received a tax invoice from a supplier, but it was not a proper tax invoice and you decided not to claim the VAT. So that also can be come under this clause. So we have to wait for the cabinet decision for further clarification. And then tax on income imposed on taxable persons outside the state. So that also, if you have paid any foreign tax in any other foreign jurisdiction, that also you cannot deduct from your taxable profit, but there will be tax relief that will be dealt separately in the tax return. That's after you compute the 9% tax. And then the last category will be any other expense as specified in the cabinet decision. So that also cabinet decision will be may include some other expenses which cannot be deducted. We need to wait for that. So we have discussed about what are all the deductible expenses and what are all the non-deductible expenses. Now the law has given two expenses based on certain percentage. You cannot deduct 100%, like entertainment expense. Entertainment expenses can be deducted up to 50%. You cannot deduct 10%. So if you are incurred any entertainment expense, 50% on 50%, you need to pay corporate tax as well. So this entertainment expenses or this restriction applies to any expenditure incurred for the purpose of receiving and entertaining taxable persons, customers, shareholders, suppliers, or other business partners, including but not limited to expenditure in connection with any of the following. So the law doesn't give any SOT list. It is an inclusive list only. So the first one will be meals, accommodation, transportation, admission fees, facilities and equipment used in connection with such entertainment or amusement or recreation or such other expenditure as specified the minister. So if you incur any of these expenses, you will not be able to claim 100%. It will be only 50%. And the law says customers, shareholders, suppliers, or other business partners. And the law is not specifically addressing employees. So that also we need to wait till the cabinet decision. And generally, it will be a permissible. We think it will be a permissible expense, but as I said, we need to wait for the cabinet decision to take a final call. And the next expense which is subject to a ceiling will be interest expenses. This is because the corporate tax law wants to discourage excessive debt financing and to ensure that intercompany loans and other arrangements are done for a valid commercial reasons and not just to take any corporate tax advantage. That's why the law has introduced a ceiling on interest expense. There are two limitations. First one will be general interest deduction. It will be applicable for all non-related party loans, like you have bank loans or other loans. Businesses with net interest expenditure above a threshold. Here also, again, we have to wait for the cabinet decision. They will be mentioning a certain amount or certain percentage of net interest expenditure. If you have incurred an interest expenditure above the threshold to be set by the cabinet decision, then your net interest expenditure up to 30% of your earnings before interest, tax, depreciation, and amortization, excluding any exempt income, can be deducted. The law says net interest expenditure, not interest expenditure. So net interest expenditure as defined by law is total interest expense minus total interest income in a tax period or tax year. So you need to see how much is your total interest cost and then deduct that by your interest income. Then you'll get the net interest expenditure. And if it is above a threshold to be set by the cabinet decision, then you can deduct only 30% of your earnings before interest, tax, depreciation. It's EBITDA. Any net interest expenditure which exceeds this limit, you can carry forward it. It's not fully disallowed. You can carry forward it for next 10 subsequent tax periods. So you have almost 11 years time to deduct your total interest expenditure if it is more than the threshold. And if your interest expenditure is below the threshold, then this rule won't be applicable. You can deduct in the first year itself. And this limitation rule will not be applied to banks or other financial institutions or insurance providers or individuals who are conducting a business. So for them, there is no limit. You can deduct all the interest expenditure in the year in which it is incurred. And the next limitation is on related party loans or loans received from your connected persons or related parties. No deduction shall be allowed for interest expenditure incurred on a loan obtained directly or indirectly from a related party in respect of any of the following transactions. Let's say you paid dividend to a related party and the same amount, and you are at the same time you received a loan from related party which is subject to interest. So that interest you cannot deduct it. A redemption, repurchase, or reduction or return of share capital to a related party. You redeem some shares or you repurchase their shares, and at the same time the related party has given a loan to the company with interest, then that interest also you cannot deduct. And a capital contribution to a related party. The acquisition of an ownership interest in a person who is or becomes a related party following the acquisition. There also you cannot deduct the interest which you pay to your related party or connected persons. The interest on related party loan will not be deducted unless the taxpayer, unless you have to demonstrate to federal tax authority that the main purpose of obtaining loan and carrying out the transaction is not to gain any corporate tax advantage. It is for a genuine business purpose only. So that you have to prove to the federal tax authority to claim it. If you cannot prove it, then straight away this interest expense will be disallowed. So that's it from my side. Now Mr. Sajid will take you through the rest of the slides regarding administrative procedures, what are all the financial records you have to keep, etc.
Yes, thank you, Santosh.